All right, guys, so let's quickly hop on this one. Let's hop on this one quickly. Right, this is a boom 1000. Sorry about that. A boom 1000 strategy. Works for boom 1000, works for crash 1000. I haven't tried it on any other asset yet, but for boom 1000 and crash 1000, it works very fine and very easy. Okay, so I'm going to show you guys how it works. I just need you to pay attention to the video, ensure to watch to the end so that you can get all the information I'll be sharing in this video. All right, and if you're a new subscriber to our channel, if you're a new person to this channel, do well to subscribe. All right, turn on your notification bell so that whenever we post new content, you get to see it firsthand. Okay, and also do well to share this video if you find it beneficial. Share it to others that may want to also have access to this free knowledge. Okay, and again, we are going to be posting our free Telegram group. The link of our free Telegram group in the description box of this video, so that you can join in and have a look of what we're having on there. It's very good for you to be amongst traders who are learning together, who are doing stuff together, and you can pick one or two knowledge that will help change your trading career or trading journey, as the case may be. All right, so for this strategy, I'll be sharing with you a quick indicator setup that will help you actualize your financial goals just by following the instructions that I will share in this video. Using this indicator based strategy. So let me quickly show you guys the setup. We are going to be using moving average, 2 moving average on the main window, that is our main chart. We are going to be using average directional movement index in the indicator window 1, and 2 moving average still in the indicator window 1. All of these have different setup that will help. When we put them together, when we combine them, we have good confluences that would prompt our entries and our exits in the market. So this strategy will basically teach you to show you where to enter the market and where to opt out of the market. All right, to show you where to enter the market and where to opt out of the market. Okay, please guys, pardon my voice. I can't raise my voice more than this. All right, people in my Telegram group already know what's up, and I just hope you bear with me. All right, so guys, let me quickly show you guys the moving average. The first moving average in the main chart will be the period 50. Shift will be 0. Method will be simple. Right, when you click the method, you'll see a list of methods that you could use. So you just choose simple and then apply to close, guys. All right, choose any color of your choice, but make sure it is visible on your chart. I'm talking about the styling. All right, use any color of your choice, but make sure it is visible on your chart. All right, so you're done with that. You just click done, and then you have the first moving average, which is the what we have on the main chart, and then you go back to add the second one, the second moving average on your main chart. This time around, we'll be having period 21. Shift -3. Method should be linear weighted, guys. If you click that, you'll see a lot of options, and you just choose linear weighted and apply to close, guys. And then levels are not needed, so you just leave that. For visualization, you're going to be using any color of your choice, but make sure it is visible on your charts. Leave it to be at all time frames, and you are good to go. So you just click done when you're done with that, and you would have the 2 moving average lines on your main chart, just like we have here, just like what we have here, the blue line and the red line here. Those are the 2 moving averages, the 2 moving average lines that we just placed on our main chart. This moving average will help us detect when the market is good for a sell, since we are talking about scalping, right? Remember, this video is about taking a couple of candlesticks and leaving the market with good profits instead of catching spikes. All right, so we are going to be selling the boom 1000 using this strategy and buying the crash 1000 using this strategy. Okay, we are going to be selling the boom 1000 using this strategy. We are going to be buying the crash 1000 index using this strategy. So basically it is for scalping. All right, so we're just going to be taking a couple of candlesticks and we are out of the market. All right, so we'll move on to show you guys the next indicators. This set of indicators would be in your indicator window 1. All right, so the first one I'm going to be adding is the average directional movement index with the following parameters. You can see we have period 1, levels should be 95 and 90. Okay, you can label it if you want, but if you don't want to label it, it's still fine. All right, I can decide not to label it. All right, but it's good to label it so you know, especially if you are new to this whole thing, you label it so that you don't get confused. All right, so the styling, make sure it is a visible color. I like black when I'm using the white background, and maybe the white background when I'm using, I mean the white color when I'm using black background. So you click done and you will be having okay, for the styling here, for the visualization, the styling, you can see I have all white plus the air is white and minus the air is white. All right, so all of that has to be the same as what I'm setting up here, so please take your time to look at it. All right, so click done and then you would have your ADX right here. This is the 95, level 95, and this is the level 5. All right, the only thing we are seeing from the ADX indicator are just the black lines that indicates your level 95 and your level 5. All right, which are your resistance zone and your support zone respectively. Okay, so we have that, delete that. We have that, and next one is going to be the moving average. Okay, so we have the moving average. The first moving average in the indicator window should be the period 1, period 10. I mean period 10 shifts to 1. All right, make sure your shift is 1, the period is 10. Method should be exponential, apply to close. All right, levels are not needed, so you just leave there blank, don't add anything. And then for visualization, time frame should be at all time frames, and then your styling, you can pick any color of your choice, but make sure it is a color that will be visible on your charts. Okay, and then you click done and you have the red guy over here, the red line over here. All right, this is the moving average that I just added, and then I'm going to go ahead to add the next one, which would be the next moving average. This time around will be period 21, shift -5, method smoothed. All right, whatever that is pronounced as. All right, apply to close. Levels are not needed, so you go ahead to leave that blank. And then for visualization, remember to leave it at all time frames and choose a dark color. All right, if you're using the white background, and then a bright color if you're using the dark background. Okay, so you just click done when you're done with that. I chose black, so I have my black moving average line here. All right, now how does this work? Okay, first of all, we have the indicator set up now, right? You can see that it is clearly set up on our chart. All right, we have the section that shows the main charts. All right, this is the section that shows the main chart, and then we also have the section that shows the indicator window, which is this area. Okay, the whole of this area, it shows the indicator window. All right, so how do we use this indicator to achieve a couple of candlesticks? All right, I'll suggest you take just 15 candlesticks. If you're good with 15 candlesticks, you should be good with the profits, you should be good with the gains. Okay, if you can conveniently take up to 15 candlesticks, you should be good with the gain. Now let's count how many candlesticks that one would have picked from here. All right, let's say you took your trade here, so we got 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15. All right, 16 17 18 19 19. We've counted 19. We got 20 21 22. We got more than 15 candlesticks basically. All right, we have more than 15 candlesticks basically, but in my opinion, it's okay to just target like 15, and leave the market. Now, how do you find an entry? Okay, how do you find an entry? Now, this is it. Basically, you just have to allow the market to come to an area where it usually reverses from. All right, now remember that for boom 1000 you want to be selling to catch these candlesticks. All right, and then for crash 1000 you want to be buying to catch these candlesticks. So since we are selling the bull market, the boom 1000, all right, we want to be selling from our key resistance level. All right, our key resistance level. Now, if you are one of my students, you would know what I'm talking about. You know what I mean by key resistance level. All right, and you'll be able to identify it with your naked eyes without the use of these indicators, without even going through the sole stress of adding these indicators. You could just wake up in the morning, look at your chart, and you already know the key resistance levels. Now, if you don't have this knowledge, okay, if you are not good with price action trading, and you are just trying to make money, quick money, and just leave the market, all right, so you could probably pay for our mentorship or any other mentorship anywhere that you feel is good for you, because I urge you guys to actually learn the art of analyzing the market without these indicators. Okay, now if you don't have that knowledge, you just want to make quick money and leave the market, this is for you guys, this is for you. But for somebody who wants to be staying in this market, who wants to make money in the long run, you need to understand price action trading. Okay, you need to understand price action trading, which would open your eyes to understanding the market direction, knowing where there are key reversal points, all right, key entry points, key exit points, all right, where the market usually reacts at, because you can't just jump into the market. All right, so for my students, like I said, without looking at the indicators, you could just tell where your key resistance levels are. All right, you could identify that on a higher time frame, and you know about the top down analysis going from the highest time frame down to the lowest time frame, and just figuring out the key interest zones where you want to be making your trading entries from. All right, all of that. But if you don't have that knowledge, okay, so just pay attention to this. Now, you simply watch this two lines, your moving average and your indicator window one. Ensure to see them intersect around here. All right, ensure to see that they cross each other. Let me break that down. Ensure to see that they cross each other around this level, around level 95. Remember, I said that the level 95 is where you sell from, and level 5 is where you buy from, right? So this basically just indicates your key resistance and your key support level respectively. Your key resistance is actually the 95 here, while your key support is actually the level 5 here. Now, when price has come to your key resistance, which is your 95 level here, all right, level 95 here, and it intersects these two what is it called, these two moving average lines, when they cross each other and then they start going downwards, all right, that shows you that price has gotten to what people call an overbought level, right? I don't really call it that. That is where I look at as the resistance level. That is where I look at as my key zone, where price is likely to reverse backwards from. All right, so when price gets to that place and crosses like that, it shows that a price action trader would probably see the market going to maybe hitting their trend line, hitting their horizontal line, hitting their Fibonacci level, all right, and then facing downwards, pointing back downwards and trying to reverse to the downside. All right, so that's what price action traders would call reversal at your key resistance level. Now, when that happens, for you to be sure that it's going to actually sell from that level, you need to also see an intersection, and just allow the market to also intersect. The two moving average lines here should also cross each other, just like that. All right, just like what you have here. They should also cross each other on the main chart. Okay, once there's a crossing on the main chart, then you can take a trade. All right, you can take a sell on the boom 1000 market. Remember, I said you are buying the crash 1000 market and you're selling the boom 1000 market. So for the sake of this video, this is the boom 1000 market. So we want to be selling right after the crossing. All right, what I usually do is I allow the candlestick that crossed to close properly, right? Once it closes, I can go ahead and take it and make an entry. All right. Or sometimes I like the second candlestick on this 1 minute time frame here. I like the second candlestick to still close properly. Once it closes, all right, once it closes, I take my sell. All right. So if I had entered the sell here, you can see how many candlesticks I would have caught before there was a spike, and the spike still wouldn't take me out. It still hasn't even come close, right? So had it been entered here, basically, of course, obviously this would have been my this structure here would have been where I base my SL. All right, so I would probably just place my SL above this structure, right? So that means my SL would have been just above this line, right? This black line, this horizontal line here, right? My SL would have been just above the horizontal line, or maybe I would have even taken it up above this other structure, this bending of this moving average line. Okay, so that means that even this spike would have nothing on me. All right, that means one who entered here, anybody who entered here would still be in the market and still be in good profit all the way down. Okay, all the way down. It is that simple, guys. It is that simple. It's not so hard. All right, it's not so hard. Now if you have a fair knowledge of price action, you could look at the indicators and see what it is telling you, and then compare it to your price action analysis. Go to the top time frame, go to the highest time frame, trace it back down to the lowest time frame. I don't really look at the 1 minute if I'm analyzing the market without these indicators. Okay, so trace it back down to 5 minute time frame and look for an entry. If it aligns with what the indicators are saying, then you know that your analysis is good, or you know that the indicator settings is good, because your analysis has to be good. If you are my student, you can't but have good analysis, right? Because I give you the best of the best strategies. All right, one of my students just had to watch videos of our past class recordings, and she is now pro. She's now good to go. All right, if you're in my Telegram group, you see how much, let me not use the word bad before you guys think of it the negative way, but you see how much praises I give to her. All right, all the appraisals, you see that she's too good right now. So anybody can do it. All right, so just make sure that you have the right knowledge. Okay, now with the back test, you see that on several occasions what I just explained had happened again and again. All right, so look at this area. You can see that there was a crossing here, and then it didn't just sell immediately though, but it still sold at some point. All right, so after the crossing happened here, the market went all the way down. Okay, it went all the way down, all right. Even with all this turbulence, of course, these are things that happen in the market. You can't rule away retracements and all of that, so it happens. But this wouldn't have had anything on anybody who placed a sell right at that moment. Okay, and then if you keep going, you just might keep seeing more and more. You can keep seeing more and more more and more examples. Sorry, I got distracted. All right, you can see that it just keeps happening. All right, you can see that it just keeps happening. You can see this is another very beautiful one. You see, after it crossed, you can see how the market just keeps selling. It keeps selling, guys. It keeps selling. All right, so this strategy is very simple and it's very easy to use. You just have to follow the video, watch till the end. Ensure to watch the end. Always do that, guys, so that you get good information, every information that I'm spilling in this video. And please, if you try this and it works for you, do well to drop a good review in the comment section. If you also have challenges and you want me to address them, also do well to drop your reviews on the comment section. Okay, I'll also leave my WhatsApp number in the description box, so that anybody who wants to opt in any of my services, who wants to pay for any of my services, you can just reach me directly. And please, if you reach out to me, go straight to the point. Okay, don't ask me about my family and all of that. It's really not necessary. So just go straight to what make you text me, and I will respond to you immediately. Okay, I'll see you guys in the next video.